Even before I start, I have to say something about Flipkart. Everyone talks about Flipkart galvanizing the startup ecosystem, the venture capital ecosystem, and even the new economy thinking. But for me, actually, it's more about the ambition that Flipkart has kickstarted among founders, among team members. And so, for that, we have a lot to be grateful for to you. Thank you so much and welcome.
Glad to be here. Very excited about this chat.
Flipkart was the first big breakout consumer tech company which created meaningful wealth with ESOPs. Yeah. And but the time that you actually started the company, 2008, and probably when you created your new ESOP policy, it wasn't very common to have ESOPs even, right? So why did you decide to have ESOPs? Why did you, and where did the idea come from? How did the first policy get drafted? Because even today, and I should tell you this, that a lot of us reference the ESOP policies of Flipkart as gold standard in the ecosystem. So, how did all of that happen? Who helped you create that?
When we started, there was obviously only Sachin and me, right, the co-founders, and then we had a few sort of junior operating people in the company, and we were like selling 100 books a day, 200 books a day, and then when we started scaling up, we felt the need to bring on a few more people who could help us scale on the operations and category management side and the technology side, especially. So, and obviously, I mean, we hadn't even actually raised money yet. So there was no currency to pay somebody to come and work with us, right? So we had to think of ESOPs very early because the only currency we had to offer was stake in the company. That okay, you come and work with us, and if this becomes big, we all make a lot of wealth. So that was the sort of only financial carrot we could offer. We couldn't really offer market salaries. Even actually after so G joined us pre-funding, and then I think Mikin joined us around, yeah, or after sort of what you would call seed funding today.
Yeah.
Uh, and even after our first sort of round of funding, we I guess didn't have enough money to pay market salary so, to people. So I think that was kind of forced us to obviously uh, think about this ESOP as the instrument. And I think we were never sort of shy about. I think it was very clear to us that as founders, we wanted to build something really big, and owning a small part personally of something big was probably the way to go rather than owning a large part of something, let's say small. So, I mean, as a founder and depending on your business that you're in, you also have to make that choice. So, I think we were quite clear about that as well. So initially, for the first maybe like 1, 2 years, there was no policy. There was just this sort of promise that yeah, this is the equity, this is the number, and yeah, if we all do well, then we can have a policy and paperwork in place, which which uh, which makes it worthwhile. Otherwise, is I mean, the value in the initial days is zero. So. Yeah, that's how we started. But once we raised, I think a couple of rounds after the second round, probably after the Tiger round,
Mm-hmm.
is when I think we formalized. A lot of the learnings came from obviously looking at how companies in the US used to do it, startups in the US, because in India there was, as you said, not much.
No, it's amazing. I think a lot of this is, in your case, was born out of necessity. In some sense, like you said, there wasn't enough money to go
Yeah.
around. So how do you get people aligned? And then a lot of first principles thinking is what it comes across. And I remember, like when my previous company, and we were a startup in 2008, for us from financial services, having ESOPs was a given because we had
Mm.
seen in the 90s or late 90s, early 2000s, companies like HDFC Bank, Kotak, etc. So we actually sat down across our founders and had a very open conversation about ESOPs, because we had seen
Yeah.
that wealth creation happen in the financial services ecosystem. And the other thing, and having been a wealth manager, I distinctly remember 2016 when the first big buyback of Flipkart happened. It was all over pink pages. There was a lot of
Mm.
conversation about how many thousands of people have now become prospective wealth management clients. Today, having relocated to Bangalore, I stay in APR, and then there is a lot of that wealth that powered that real estate also. But when the first buyback happened, how were people thinking about the wealth that or liquid cash that they were creating? Because I remember having interacted with a lot of these individuals back then, and frankly, they had no idea what to do with the money. And some of them have continued to be clients after now nearly a decade. Uh,
Mm.
what was going on behind the scenes when you were talking about the ESOP buyback?
So I think we started the ESOP buybacks also much earlier than I think 2016 was probably the big one.
Yeah.
But I guess we had probably done two or three even before that. I think it just starts creating that value of the ESOP in people's mind, while it may be small, but
Yeah.
it makes it real, right? So 10% of what people could have sold was sold, let's say, in the first two, three instances, because people saw the growth of the company and that prospects were really, really great. So there was a lot of growth ahead of us, and didn't make sense to sell. So very, very few people, maybe 5-10%
Hmm.
of what could have been sold got people sold. Everybody held on, which is a great signal, right? For
Yeah.
the founders, investors, everyone, that the employees believe in the company and are not looking to sell their ESOPs. I think 2016, what you mentioned was like that was almost like a mini IPO, right? That was like
Yeah.
at a, I think, 12 or $15 billion probably valuation. And that meant what people could liquidate were significant amounts, life-changing amounts. So when it becomes a life-changing amount, then it makes a lot of sense as an employee to take liquidity. A
Yeah. So
lot for a lot of people, it was like buying their first home, I think was the first main thing. And then, as you say, then they probably didn't know what to do with the rest of the money.
yeah. No, actually, it's a good problem to have. I remember our first buyback at Deserve, and this was 2000, this is about a year and a half ago. And at that time, it was very hard to convince people to take any liquidity, because
Yeah.
thanks to Flipkart, people knew what potential value it can become. I remember the only person who took liquidity was an ex-employee who was starting up and used that money to fund his new
Hmm.
business. So I think
Yeah.
it's amazing. And I think even for me in 2016, I had my first liquidity event as an ESOP owner. And I bought my first house with that. So I think
Yeah.
life-changing for sure. But now that all of these buybacks have happened, people do believe in the value of equity. Back
Hmm.
then, was that belief as strong? Like when you were granting equity, especially to people who
Hmm. That's a
joined?
great question. So I think back then, obviously, that belief was that strong in a few people, like maybe in like 10% of the people that it is there today. So maybe today there are 10 times or 50 times or 100 times the people with that strong belief. I think this also became like a great self-selection tool, that if you don't believe in it, this is what we are offering. If you believe in the company, if you believe in this is in making it big and working towards it, then you join. Otherwise, you don't join, right?
In the book, I've written about this concept of the zone of frustration, which happens after you've believed in, you've joined the company. But for an extended period, when the company is going through its ups and downs,
Mm.
a lot of your peers who are working at probably McKinsey, etc., are making significantly more cash than you are and have very distinct lifestyles. Uh, and you are doing the 996 kind of situation. So not only are you working harder, you're making lesser cash, and that belief also gets tested. So I think it's fascinating that you also, brought that in as a test for employees joining early, and maybe something that early stage founders can lean on. With that, Vinny, I want to bring in Mags. Mags is founder of Namma Yatri. I sent my team a small image this morning. I took a Namma Yatri to work to the office this morning, and I was scrolling through the app and I saw Mags putting himself out there. There was an image where he is signing off saying that your safety is my responsibility. So Mags, welcome. Mags, there's this urban legend about you that every month today you drive an auto rickshaw to actually be close to your user who is the auto rickshaw driver. Is that a true story or not?
Yeah, thanks, Sandeep. Thanks, Binny. Yeah, I've done close to 500 odd trips as a driver, multiple one-day trips. But before going to auto driving story, I thought I'll share my Just Pay story. And yeah, I think exceptional 8, 9 years in Just Pay. So I took some salary. I think ESOPs versus salary conversation. Salary is to protect the downside, right? One of our values is create cushion and jump up high. I think initially, when that crisis and all happened, we didn't create cushion at all. No de-risking. Just jumped up high and broke and had a very bad, experience and a hard lesson, right? But just to protect that downside, so that there is no financial stress, there is no you're not getting into too much stress. That much I think salary is required. In fact, from Just Pay, when this Namma opportunity came up as a founder, there was even proposal of Go Zero, just on ESOPs, etc. But I thought a little bit at least to pay bills, because ESOPs is anyway a long term thing, right? And that's an extraordinary upside. I felt, right, and uh, in fact. I didn't even know about ESOPs that Vimal and Sheetal gave me for 2 years. uh, I'm not maybe that I'm not recommending that as
I wouldn't advise that to everyone, Max.
sure.
People
Makes
should
sense.
read their grant letter. In the book, we have talked about how the grant letter should be structured. But yeah, I'll let that pass.
Totally. I think people should read your book, understand ESOPs, etc. But the point I'm trying to make is, uh, once you get that ESOPs, it's not you're not thinking about it all the time, right? This is more like a seed. You grow it not by digging and seeing whether it grows or not. Rather, you're investing in building the product, solving customer problems, and building your capabilities, learning. Right, and yeah, the because that everyday journey, the ESOPs liquidation events can happen after 10 years, but the excitement and commitment is about the everyday journey. I'm sure Vinny would have had like hundreds of people like me whose motivation would have not been about, hey, will I get ESOPs or not, right? I feel it is irrespective of ESOPs. Are you super excited about joining the company, solving the problem for people, right? And yeah, and for sure, I think when we go that route, the journey becomes very exciting. And one interesting thing about this ESOP is you have control and influencing the outcome, right? Like unlike say we invest somewhere, we can only see the scorecard. Here, you have the ability to influence the outcome.
Bangalore folks, if they see Mags in the auto sometime, don't be surprised. But I think, and a lot of learnings from what you just said. One of the questions we've got in the run up to this webinar, and Vinny, I'll just put that to you maybe, is that people are asking how to decide which founder to bet on. Like, you're excited about the mission, but there's a little bit of that tentativeness that will this person be able to guide me through this long journey, long, hard, tough journey. And you're now an investor also. So how do you think about that?
Yeah, no, I think that is a key point, and what Max also talked about, right? So when you're deciding to join somewhere, you're really joining for the excitement and the mission, and uh, so the problem statements and the people, right? The people there that you want to work with, that you I mean, that you meet through the interviewing process, the culture that you see, and the ambition of the company, the mission ambition of the company. Does that sort of all of that excite you together? Because that's also a big reflection of what the founder has built, right? I mean, that is the founder's work right in front of you. I mean, the team is built, the culture is built, the ambition that people talk about in the company and how they work. You can sort of touch and feel that through the interviewing process. And I think if you're doing this interview process in person, it can make a lot of difference versus, let's say, doing a lot of these interviews on Zoom, because I think the signals you pick up would be a lot more. So I think people appreciate sort of that physical touch and feel, especially when, let's say, ESOPs are going to be large part of your of the compensation versus, let's say, a small part of the compensation. I would recommend definitely like meeting a lot of people in the company. And yeah, I mean, then after seeing all that, you have to still make a judgment call on like on yeah, the founders, and because a lot of it is decided by the founders' policy, and when will, let's say, they offer liquidity, what kind of sort of, if a liquidity event is happening of the company, how will they take care of you, and are the founders really employee friendly? I think that's very important signal to see and again discern from again different sources.
No, actually, this is very important. And I think this point that you evaluate who are the people that the founder surrounds himself or herself with is, I think, very, very crucial. So, therefore, I actually feel very strongly about this that interview processes should involve a lot of leadership team and not just like, because it's not only good for us as deciding to whom to bring on into the company, but for
Yeah,
team members to actually, or potential team members to experience what the company is like. Max,
yeah,
what's the process here for you? And I also want to draw on that one thread that you mentioned that, you should have enough salary as an employee to have the lights burning. And therefore, that cash versus ESOP balance, how do you decide how to strike? Or how do you recommend your potential team members to figure out when you're structuring a compensation for somebody who's joining you today?
Just enough to protect the downside, I think, as long as that is there. And in fact, I've seen people who have uh, preferred more ESOPs than cash. When such conversations came up, we sometimes give that option. Hey, would
Hmm.
you prefer more ESOPs than just salary, right? And I'm sure many of them would have seen that upside in just pay over a decade now. And I think as long as it protects your downside, I think you should bet more on the upside, which is ESOPs. Yeah, basic living expenses, and if you have stress, obviously you have to take care of it. For that, you optimize for cash. I think I would otherwise then just bet full on in your. In your ESOPs, right? Yeah, when we were discussing, it also felt like your portfolio management. It's your career portfolio management, right? Like salary is more like your debt fixed income. If you want upside, then you have to go for ESOPs. And if you're joining a very early stage startup, it's probably like a small cap, but then you can influence the outcome. You can, it's not just like investing, right? And
I love the analogy. I love the analogy, Max, because it's also that as a portfolio manager, we tell clients that you have to be able to ride the wave. Like during the time when there's ups and downs, you should be able to live through that. But I think lots of learnings from this particular segment, especially on the fact that how do you balance cash versus equity. It's also a learning from Max about how to stay close to your user. I want to bring in somebody who's probably had the cash versus ESOP conversation with Binny directly. Anil runs Scapia. It's a travel first card. And I wrote to Anil when I sent him a copy of the book that how much we respect Scapia at Deserve. He's raised over $100 million. And this is and also done an ESOP buyback, by the way. But before we get into all of that, Anil, I want to get some gossip from you about Binny. Like, how was Binny as a boss? What is it that you couldn't say earlier that you can say freely now?
I don't think I can ever say that to the boss, but good to see you guys, and good seeing you, Vinny. I, uh, I can tell you two stories. One, when I joined Flipkart, I don't think Vinny will remember this at all. And two, when I recently messaged him and I did the buyback, the the conversation I had with Binny when I was joining Flipkart was exactly this on cash versus ESOPs. I had a bit more awareness of cash versus ESOP because I lived in the US. I lived in the Bay Area as well. So, a little bit more awareness than maybe the market had at that point. And I remember having the conversation saying, I don't want this much cash, I want more ESOP. In fact, I was negotiating for 2x the ESOP that I was getting. And then Binny was very clear with me. He said, I don't know you, and let's work with each other for 1 year or 2 years, and then we'll figure it out. Uh, I never ended up having that conversation with him after that, but I ended up getting more than my due. I think I sincerely believe Flipkart was very generous with everybody and was very kind to everybody who made the company. And I don't think anybody had to ask or get whatever was their due. It was just given. I think that's what has given a lot of comfort for the ecosystem. And frankly speaking, maybe Infosys before Flipkart, I think probably was a little bit of that ESOP story in the 90s.
Yeah.
But if the startup wave really appreciates ESOPs, I'll give it to Flipkart, Sachin and Binny to have done this. I mean, look, I've been a recipient and I'm a bit older, but for them to have done this when they were so young and think so forward, I think is a huge respect. So, in fact, that's my second story. That's what I had told him when I did my ESOP buyback just few days back when I announced it in the company. I was like, I was feeling a little bit of sense of satisfaction as a founder to have done it. I'm sure Sandeep, you also felt it. So I messaged Binny as like, over so many rounds, over so much scale for so many employees. So I said huge respect. So yeah, that's the gossip I can give you on my manager.
Maybe we will find out separately, Anil. I actually want to switch back to this whole concept of buybacks, and maybe for all three of you, uh, how do you think about a good timing for a buyback? Is it something should be cadenced? Is it something that should be linked to certain milestones? Binny, Anil, Max, like how do you think about that? Maybe any of you can take this one.
I can go. I think Binny has the most experience in this, but I think, I mean, look, I've only done one, but logically speaking, it's a combination of few things, right? One, the company's milestones and whether the company can afford it is obviously going to be a big one, right? And being able to do that, right? Two, I think, who deserves it? Who do you give it to? Who do you not give it to? All of these are also important. I mean, you want to obviously incentivize all the people who worked really, really hard, but you also don't want to create adverse incentives, right? Um, uh, so yeah, I think getting into a fixed schedule, especially at an early stage of a company or even growth stage, I don't think it will be that easy unless you're you're sure you're riding a tiger like Flipkart. But it's
Even at Flipkart, it's also possible. I think the
yes.
schedule can only be Walmart. Walmart has it on schedule, not when you sell it to Walmart, they can have a
Yeah. So I
schedule.
think you need to get into very, very late stage and when being able to have that balance sheet and predictability, right? Both of the company and the fund. So I
Mhm.
think the timing has to be right, and it's obviously not just the founder decision, also, right? So the founder and the board obviously decide collectively, and you do it when it is right, both for the company and for the employees. So
Yeah.
I don't think I can give one answer, but it has to be that. Yeah, yeah,
I think the company has to be doing really well. I think when
yeah.
you're doing it, so that people that reinforces sort of also the belief that if we do well, then company sort of the
Mm.
ESOPs matter and the company also takes care of us. When you're not doing well as a company, then obviously all the cash that you are raising is needed for the company, right? So you don't have the option of doing a buyback. Anyway, sometimes when you're like for a long time, let's say you've been struggling and then just getting out of it, you still need most of the cash for the business. It might make sense to do some cash on the side for employees so that they they kind of get a feeling that things are now turning around. But mostly, like ideally, when the company's doing really well, is when you want to do it and do it sort of in the right way.
No, actually, it's great. The framework that I think both of you are laying out is very clear that in the early stages of the company or even in the growth stage, don't expect the company to do periodic buybacks. It's only when it's at much later stage, and as team members or employees joining such companies, knowing this is very important because sometimes when we go in expecting that there will be periodic buybacks, a lot of times people apply into companies after they hear about a buyback happen. The assumption is that at very frequent periods there will be buybacks. That's not the case. It is usually linked to the stage of the company, the situation, the kind of sort of cash the company is able to raise. But I think this brings me back to this question from an employee perspective of should I even participate in the buybacks? And Max, I would love your view. I mean, you've like at JustPay, you've been an employee. Anil, you've been an employee at Flipkart. Like how much to participate, if to participate or not. How is there like a thought process that went behind when you decided to participate in it?
Sandeep, I have a story on this, and that actually changed the way I think about ESOP buyback and how to make these decisions. So my first job was in a company called Qualcomm. Many folks may know this. It's a chip design company. I was an engineer. I had joined the company fresh out of college, and um, I think it was a ESPP, but not a ESOP. So it's more like, like the RSUs, but you get the company stock. And I think I was in the US and I received a whole bunch of, option to buy at, I know, $35 or something like that. And then I kept getting those and I never sold anything for 5 years. Okay. And then I knew I was going to go to an MBA program, and I resigned from the company. And the company had a 3 month, basically, after you leave the company, you had 3 months to, basically purchase the options or stocks, right? So to exercise it. Right at that time, a case was filed against the company, and pretty much everything fell underwater. Yeah.
Wow.
Uh, and I actually made grand plans saying I'll, make all the money, and then I'll use all the money to pay for my MBA, for my education. Uh, I received 1/10 of it, or 1/5, or not even 1/5, actually. It was like, yeah, 1/10 or 1/20th or something like that. It was like a big jolt. I was like, it's out of my control. You keep dreaming and you keep thinking, I'll take it later. And then you will say, take it on a rainy day. But yeah, it was a big storm rather than a rainy day. So uh, actually, after that, when Flipkart always gave me the option, one, I always tell people, even now, or I used to tell my peers also, that you're already all in on the company.
Yep.
Right? You're already, you have more invested, you have more salary. Anyway, you're riding a ship that is actually going to go bigger. And so you should keep taking out for your mental peace and not have so much risk. So when the company is actually giving that. So yeah, that was my lesson. It was a hard slap, but it was a good lesson. And I
Yeah.
exercised it well after that. Yeah.
Yeah, no, absolutely. I think, as good wealth managers would do, we ask people to diversify. Like, even in my own journey, in the previous company, we had ESOPs, and at every year after it went public, the idea was that we should sell a small quantity, because you need to constantly keep de-risking that. So I think that's something that's important. In fact, we look at how Jeff Bezos thinks about his equity ownership in Amazon. And what we see is that every year he sells a certain quantity. So it's already it's like a Bezos SWP, or a systematic withdrawal plan, that is happening. With that, I want to bring in Varun, who's founder Urban Company. We always think about how much we have to be grateful to Urban Company and deserve a lot of our leadership is people who have cut their teeth at UC. So thank you so much for mentoring so many of our leaders, Varun. When the company is nearly 20,000 crores in market cap, people have also made enough personal wealth. So how do you drive that hunger after there is a tremendous amount of financial security in the leadership team? Does that help take bolder decisions, or does it hinder that because now people want to keep it safe?
Yeah, I think it's a great question. Internally, the conversation always is, we're very far from that goal of being a very large consequential company. We're also fairly small, just over 500 crores in quarterly revenue. I mean, look at what Binny has created. We're still not even a shade of it. Um, so I think the internal conversation always is we really have um, a long way to go. The IPO was never a step that changed any of it. It just it happened. 2 days later, we were all back to work chasing the same thing. And yes, adapt to the new setting, be more responsible, but not lose sight of what we're really trying to do.
Benny, for you, how was that internal conversation like Varun was referring to them, when after having scaled and people making meaningful wealth, you're now asking them again to go for the moon. So how do you talk to employees about that?
Yeah, no, I think the once you are sort of in a company like Urban Company or Flipkart, right? I think it becomes kind of like a habit. Okay, this is done now. What is next? So I think for the whole company. So it's not we actually we I would say we didn't really have to have that conversation. People would ask that, okay, now what do I what is the next big thing I'm going to do? I'm now getting bored with this.
Yeah.
Like Anil would have that conversation. I remember a lot of times as well that okay, what is next? I think for all key people in companies, in sort of the modern tech companies, I think that is probably not a difficult problem for founders to solve. Yeah.
Yeah. No, absolutely. I think that's also testament to the culture that all of you have created, like where people are asking you that tough question that what is the next big thing that we need to gun for. You now that you've also reached a stage and scale, Varun, where the company is very large, you're still bringing on people, and now you're again having conversations around ESOPs. This time, these ESOPs have very clear currency, and people can actually see the value very clearly. Are the ESOP conversations with employees any different than what they used to be when you were private?
Yeah, I do think there's a meaningful change in that aspect.
Mm-hmm.
Uh, the fact that you're um, truly in the money, and um, the ESOPs are liquid from the get-go. And I think that's just not the IPO event. Like through the journey of the last 12 years, as the company gets more and more established, I think that conversation becomes easier. At least there's a baseline value to the ESOP that you're getting. The
Mm-hmm.
fact that we had buybacks along the way also reinforced that this is real money.
Mm-hmm.
uh, what still doesn't change is the fundamental of ESOPs is that you have to believe in what the value can be 5 years out.
Mm-hmm.
Uh, and you are going to be phenomenally rich if the value grows. So
Mm-hmm.
still, somebody coming in new has to believe in what can happen 5 years later. The fact that the company could be 4 5 times larger than what it is today,
Mm-hmm.
uh, I don't know if that aspect gets significantly easier. It
Yeah,
doesn't.
because now you have evidence to show that it becomes much easier, I guess. And these are maybe
I
tougher
think the
conversations.
problem probably becomes a little bit opposite after you go public, right? That let's say for whatever reason, if the market is down, stock goes down, then you have to make them, and they have the ability to sell, right? You can't really stop them to sell. So you have to actually coach them that, okay, what you said, that think of the 4 5 year
Yeah.
value of this, not today's value. I think the equation changes. Whereas when you're private, there is no option for them to sell. So you're locked in anyway.
Correct. That's a conversation we've had a few times. Thankfully, our stock has done okay since we went public, but any public stock does have its ups and
Yeah.
downs, even if it is, by 20-30%. Um, and yes, at that time, how do you get both existing folks to stay calm, understand that through the last 10 years, we've had ups and downs, we've had successes and failures, and get the new folks to understand um, that they should not look at the value on a daily or monthly basis. Um,
Yeah.
the,
Yeah.
the only reason this makes sense is if you really believe in the 5 year upside. Otherwise, you should not even join. You should not even be doing this.
Yeah, that's I remember when our previous company went public, the chairman of the company got us into a room and said that you always had wealth. Now you will experience it. And we all thought that experience it means that you will see like the great days and so on. But now that the app starts showing you the price of the stock moving up and down, you start experiencing it in very different ways. Like sometimes like, okay, today you've lost so much money because optically you could have sold it at any point of time. So I think that's very interesting and very my learning here from this conversation is about like how hard it is to set up trust. I think the question around the fact that you can still create meaningfully large outcomes even after the company is very large if you have the right culture. And I think you need to be intentional about the wealth that you make after the company goes public. We put together one slide, and Samarth, maybe you can bring it up. This is especially for you, Binny. I think I'm not sure you know this, but we actually tried to profile. We went to the EPFO data to try and understand what is the second order effect of Flipkart. Uh, and what we now realize is that over 300 companies have been created by Flipsters who've created wealth at Flipkart. So this is the second order effect of ESOPs. Six of them have gone on to become unicorns, and they now employ over 40,000 employees, and a decent chunk of those employees will now make ESOPs. So now you can like truly appreciate the power of compounding that can happen here for the ecosystem. And for that, we are exceptionally grateful to Flipkart for having done this. And thank you so much. I think all of you here are creating this sort of generational outcome for India. And we are very, very proud to have you. We'll move forward. The proceeds of the book go to education of tribal children through our partnership with Earth Focus. But I'm personally very excited about this conversation. I think ESOPs will be generational wealth creators and significant second order benefits of that to the ecosystem and to our country. So we are super excited about that. Like I said, this conversation continues. Thank you everyone for who joined to listen into this stellar panel of founders. And thank you so much, Mags, Anil, Varun, and of course, Binny, for joining us today. Binny, thank you so much for breaking out of your otherwise. We hear that you're not on social media or you're not on public media so much. So thank you for making that exception, and we look forward to continue to benefit from your insights. So thank you so much, everyone, and really appreciate everyone who joined.
Thank you
Thank
very
Thanks
you.
for
much.
having us.
Thank you.